think we'll just get started. It's 1 minute past 7, and I think everyone's joining from Singapore. If I am, except Hagen. Hagen, I think you're in Hong Kong. But I actually thought, since we are all based in Singapore, it would have been more fun to have a glass of wine together somewhere and do this in person. But this format allows us to broadcast to a broader audience. So yeah, we have a really fun session, bringing together all the industry veterans to talk about anything stablecoins, anything and everything. So we're going to talk about stablecoins and the impact on real world asset tokenization, the new dollar order. So if any of the listeners have questions, please hold those questions until the end. We'll take that at the end of the session. Just to set the context a little bit, I think we've all seen the growing interest in stablecoins in the last couple of years with, regulatory clarity in the US and Europe with MiCA, and of course, maturing infrastructure. So we've really seen the market capitalization of stablecoins increase in the last 2 years. And I just checked today, it's 303 billion according to DeFi Llama. And it's estimated to reach 2 trillion by 2028. So on top of that, stablecoin transactions have also risen dramatically in the last 2 years to 27 trillion a year. I've actually been on panels with a few people here before talking about this exact topic, stablecoins. And one of the references I like to just set the tone is this transaction volume actually surpasses Visa, MasterCard's annual transactions annually combined. And of course, it's still just a fraction of the total global money transfer because the vast majority is still via SWIFT. But there is a McKinsey report which estimates that at the current rate of adoption, stablecoin transactions could surpass legacy payment volumes in less than a decade. And I was listening to a podcast, which was kind of related, just talking about how the US government had decided to stop minting the 1 cent coin because it was costing them 3.7 cents to make a 1 cent coin. And I think, eventually all coins will be phased out and notes and so forth. And the point is stable coins are here to stay. And so, without further ado, let me just turn it over to some of our industry veterans and let them tell us a bit more about what they do and, how they're working with stable coins. And we'll start with, I think, Julian. Maybe if you could, I think everyone should know who you are, but for those who don't know, could you maybe just give us a quick intro about yourself and what you do?
Hey everyone, I'll keep it short. I'm co-founder CEO of IXS InvestaX, so we've been building in the RWA space for quite some time. Hassan at Coinbase, one of our investor supporters, and Hagen's been helping us on the legal front for many years as well. So yeah, good to see everyone here. Thanks.
Okay, and then Hagen, maybe you can give a quick intro.
Yeah, sure. Thanks, Alice. Veteran is a slight overstatement. I feel like a pygmy among giants on this particular cast, but I'm a regulatory lawyer essentially by training, and I've been dabbling in fintech and digital assets, as many of you know, for quite a few years. So much so that it's probably now the main focus of what I do. So I essentially sort of help various players across the industry, ranging from exchanges to OTC desks to tokenization players, technology providers of various sorts, with their legal needs, whether it's setting up or partnering with others, acquiring each other, etc. And I'm a partner at Gibson Dunn.
Great, thank you. And Samson, quick intro.
Hello. Hi. So I'm Samson from StraitsX. We issue a stablecoin known as the XSGD and the XUSD. And these stablecoins have been recognized by the MES as being substantially compliant with their upcoming regulatory framework for stablecoins. I guess Hagen, that makes three of us. Hagen, Alice, and myself, unfortunately or fortunately, being lawyers here. We would love to dive both on the business side of things, the use case, and of course, the regulatory side of things.
Correct. We're all lawyers, and lawyers have become popular again. Yeah. And I had last but not least, Hassan. Could you please give a quick intro?
Hey, good evening, everyone. Wonderful to be on this session with you all today. I'm Hassan. I'm the country director for Singapore at Coinbase. Moved to Singapore about 6 years ago. Was in New York before. Really kind of sort of settled in at this point, and I think that Singapore is just such a incredibly vibrant Web3 and on-chain ecosystem that really, really fortunate to be here. Started the Coinbase office about 4.5 years ago over here. And we obtained our MPI license from the MAS as well, and then are servicing the domestic market in Singapore with regulated offerings, both on the consumer side with our fiat on-ramp off-ramps with SGD and USD support, and then all the other sort of native core features, within Coinbase of trading, buy and sell, hold, send, receive. And then we also service institutions and builders out of Singapore with our institutional and base offerings as well.
Yeah, I think one of the other things I'd love to talk about, it's hot off the press, is just this new token launchpad on Coinbase. And I think the first launch is Monad, which is still open for subscription until November 22nd, if I'm correct. I'm just personally curious and how it all works legally and commercially, but we'll get to that maybe at the end of the session, because I know we're meant to be focusing on stablecoins at the moment, but I promise we'll save some time at the end because this is super interesting. And yeah, I think as Julian mentioned, there's a lot of connections here. StraitsX and Coinbase announced a strategic partnership recently. So you can now have instant crypto to Singapore dollar transactions for users on Coinbase. And also, as Julian mentioned, Coinbase Ventures is an investor in our parent company. Hagen is our lawyer, and probably for many other Web3 companies in Singapore. But now that, we have all the conflicts declared, I think we can start with our stablecoin discussions. And really, I think to kind of further this whole narrative of stablecoin adoption, why, for all the speakers here, why do you think, what are the key drivers? What's actually driving the surge in stablecoin adoption? And, especially in this broader crypto market that's so volatile, is it more product offerings like tokenized assets? Is it really cross-border payments, or is it just purely because we now have a lot more regulatory clarity? Anyone? Maybe I'll toss this to Hagen first.
Yeah, sure. So, being a regulatory lawyer, obviously, I'd attribute some of the credit to enabling regulation that we're seeing across different jurisdictions, whether it's in the US, in Singapore, and Hong Kong, in the EU. We're seeing stablecoin issuance frameworks pop up across those jurisdictions, and that means that it's easier for the product providers, the stablecoin issuers, to issue their products in those locations, and that has created legitimacy, trust, a sense of institutionalization, and I think that has also been instrumental in creating this very palpable convergence of TradFi and crypto, or the blockchain space, or Web3, or whatever you want to call it. For many years we've been kind of speculating about when that convergence will happen, but I think it's definitely starting to happen. Not yet at scale, but for me, stablecoins, are really the big catalyst here, because to the question, banks and various other institutions are noticing that there is a real use case, and they are to some degree becoming more familiar with the product, and that's not only through regulation. That is also operational familiarity. Accountants and auditors are becoming more familiar with the product. All of that is creating trust capital, and slowly but surely, we're seeing stablecoin adoption sort of really ramping up. So those, I think, are the sort of the main factors.
Yeah.
Yeah,
Samson.
I agree with Hagen. So Alice, the regulatory clarity has been great. That's definitely accelerated a lot of the adoption and the use cases that we've seen. I think people are starting to understand a lot more about the blockchain technology. They are more discerning and they're more able to understand that crypto is not Bitcoin, is not blockchain, is not Ethereum. So it kind of converges after a very long, it's almost been like 12 years already. But now we're kind of gotten past that early adopter stage, and we are starting to see blockchain technologies being looked at as a form of mainstream technology. And for us, I would, of course, selfishly promote for StraitsX, we're really looking at how stablecoins function in real world payments. And so we see a lot of that growth happening, just like in the early days of e-commerce, right? Do you remember the days like when Amazon was first there, when people are having their first internet shops? How do you collect payments? Because before the internet business, it was the mail order business. They mail you a catalog, you tore coupons, you tick boxes in a form, and then you wrote down your 16-digit credit card number, and you mailed it back to the mail order company, and the mail order company then delivered the goods. So when the catalog got put online, it created a problem that how do you pay online? Do you still send a check in the mail? Then it kind of disjoints the entire flow. Now we are facing the same situation, but instead of mail order catalogs going online, we are seeing traditional Web 2 or real world type payments moving to Web 3. In fact, I think Hassan can speak a lot more to this. Last week at the Singapore FinTech Festival, they're now not just talking about Web3, they're now talking about agentic payments. So AI controlled payments. So the future is really, really exciting, and people all want to start getting on the bandwagon just to get their feet wet.
Yeah. Just to follow up, because you are operating in Southeast Asia and you've been building for a while now. And I think during the Circle Forum, it was reported that the APAC region had the fastest growing stablecoin market. And something like 50% of institutions across Asia already have stablecoins integrated in some capacity. And it's the highest adoption rate worldwide. And by the way, I think Singapore and Hong Kong were second and third largest stablecoin hubs outside of the US. Do you have any, insights as to why that might be the case in terms of, region-specific growth? Are there any differentiating factors, whether it's regulations or user knowledge or, digital advancement? Any insights to that? And Hassan, feel free to chime in as well.
Yeah, for Southeast Asia, we're seeing that as the emerging economies come, I think we are really well connected, right? Almost everyone have a smartphone, and that leads to a very open a very open mind in adopting newer technologies. Number two, I think we've got to look at the statistics also. Southeast Asia starts at a lower base, so it's naturally easier to double when the volumes and the amounts are lesser compared to like a huge economy like the US or in Europe. But nonetheless, the growth, I would attribute it to both the consumers but also the institutions being a lot more open-minded about technology. But Hassan, what do you think?
Yeah, so those are all great points, and maybe also going back to what you were asking Alice about, why are stablecoins maybe exploding and where this come from. I think the other kind of really important factor in Asia is that stablecoins when they first started out, if folks kind of remember the BitMEX days when perps used to be quoted in BTC and then sort of switched over to Tether. I think there were some really kind of foundational core kind of trading use cases that really are like in the first phase of crypto. That's sort of where stablecoin adoption sort of took off from. And it so happened that a lot of the trading volume and activity was out of Asia, and a lot of these Asian markets, really, if you were to sort of canvas across. So I do think that some of the kind of origin story for stablecoins is very inextricably tied to some of these key core Asia markets. And once sort of that flywheel starts spinning, you get comfortable with it. There's both kind of traders as well as exchanges start utilizing it. The network effect starts, and it sort of expands out to maybe other kinds of like businesses and just other kind of payments use cases sort of seeded out from there. And I think we see that continue to sort of double down that momentum in many different markets. When I was in sort of the Philippines with Coins PH, I think Philippines is also just really kind of incredibly dynamic. Like my pitch around Philippines when I used to talk to other people and sometimes inside of Coinbase as well is that Philippines, I thought it was like really the only market at the time that I saw that had like three scaled use cases for crypto. It had trading, it had cross-border P2P remittances, and then it had sort of Web3 gaming last cycle as well. And almost sort of everyone who had an e-money account, so Gcash, pretty much kind of banks sort of the whole population. People were very quick on the uptake on stablecoins because they just sort of saw it as an extension of what e-money does for you domestically. And once you get used to some of the kind of mental models for either self-hosted wallets or kind of custodial wallets, I think stablecoins are just a very natural extension because then that allows you to take the same speed and ease of access of like a domestic real-time payment rails over to cross-border use cases. And I think we've seen that glean across to businesses as well. So when we talk to businesses for why they're adopting stablecoins, and I think there's some really interesting data from Artemis on that B2B use cases have actually been growing faster than consumer use cases. That when you ask them, especially kind of across Asia, which is such a kind of cross-border heavy, FX heavy market, the three kind of use cases that they mention are, paying suppliers and vendors cross-border, accepting payments cross-border, and then doing payroll and other kinds of related use cases. And it's just so prevalent, kind of in the commercial and sort of economic fabric, across these markets that I'm not surprised that it's that dynamic. That said, I will also say that what we're seeing in the data is that LATAM is also incredibly vibrant. I think they're in some ways they're more advanced than us because when you look at use cases like Nubank, Nubank is 170 million consumer base, and they have basically fully full kind of fintech in the front, and they've gone all stablecoins in the back. And I'm excited to see more of that come to Asia as well. I don't think that I've seen a fully kind of scale neobank that's fully stablecoin in Asia yet.
Yeah. I completely agree with you. I think it's the real world problems that stablecoins solve that's really gaining the traction, especially in regions where they didn't have legacy infrastructure. So a bit easier and more palatable for a lot of these either providers or vendors or payment providers to adopt. Maybe I can turn it over to Julian and talk about how stablecoins are integrated on real world asset platforms like IXS and how it's being used on that platform. And where do you see the opportunity with real world asset tokenization through wider adoption of stablecoins?
Yeah. There's a lot potentially cover. I think, stablecoins were initially introduced as sort of trading pairs for crypto. When we started building in the RWA space, IXS was built fiatless. You can't buy any RWA tokens unless you use stablecoins. So we were always big proponents of public chains and the need to use, public chain stablecoins to buy real asset tokens, which is starting to become quite obvious that anyone building on a private chain has been going the wrong direction. And so what we've seen is this sort of incredible growth of stablecoins. They have that unique element that they're not allowed to pay interest. So now under all the Genius Act, at least in the US, it's guaranteed that stablecoins will never pay interest, at least generally speaking. So, but they've obviously, as our friend Rich Teo is behind BUSD, but which got shut down, unfortunately, right before the regulations all became positive. The top 2 or 3 coins, or the top 2 out of 5 coins are stable coins and probably continue to grow, show the importance of that. I think that we're now starting to see the first. So IXS had this ability for people to start a liquidity pool with a real world asset equity token and a stable coin or any other coin. So we were one of the first players on seeing the need of DeFi. I think real world asset tokenization is starting to prove that the most important assets are more homogeneous type financial instruments that are very liquid. And the real value of tokenization is in multiple use case for a particular asset. So you're starting to see now people. I think today it was announced that securitized BUIDL token from BlackRock is able to be used on Binance, not on Binance platform per se, but used connected to Binance to then use as collateral to borrow against, etc. So, DeFi was built on, ABC token on top of ABC token, lent to EFG token, and it was all good when things are good, and then when the price starts going down, it all falls apart. But again, DeFi is predominantly just banking services of lending and borrowing, or TradFi services. So I think we'll start to see that real world asset tokenization really starts to take off now with multiple use case for sort of existing assets, and then we really start to see the convergence of RWA and crypto. And we've been saying this since the beginning of time that crypto will help RWA and RWA will help crypto, and they'll help each other kind of grow. There's infinitely more real world assets in the world than crypto, so over time RWA will be infinitely bigger by market cap, not to detract from how successful crypto's been. But yeah, so I think ultimately, like that's the rails that were needed. It's obviously been a big journey for everyone in the space to get to that point where it was acceptable. Now with America coming on board, you've got China trying to work it out, and Europe still seems to be messing it up. But the mark is out that stable coins are going to increase US dollar dominance. If every country around the world has an issue with that, then they're going to have to try and put their own version together, and then we'll see how that plays out.
Yeah, I think, I definitely agree that with the regulatory clarity around no yield at the currency layer, it does mean that more of the yield may be embedded into the RWA assets itself rather than at the currency layer. But I think, tokenized assets and stable coins are really two sides of the same coin. One represents value, the other moves it, right? And you can't really have true on-chain assets without on-chain payment rails, and so they really do go hand in hand. But since you brought up the U.S. dominance topic, I'd be curious to hear what all the other speakers think about. Do you think this rising adoption of stablecoins will actually reinforce US dollar dominance? And we know that others are developing their own frameworks to move away from it. How do you actually see this geopolitical tension playing out? Yeah, for anyone, Hagen, Hassan.
Yeah, maybe maybe I'll just start on that. So, I think that the Genius Act is very much designed to encourage US dollar dominance by putting a lot of the US dollar liquidity on chain. And it just so happens that, the Genius Act as a regulatory framework is, relatively sort of early to the party, and many other jurisdictions across the world do not yet have crypto frameworks, let alone dedicated stablecoin frameworks. So, I think the US is well positioned to promote its currency via, various sort of on-chain iterations that represent it. And of course, the other thing that is generally quite innovative about the Genius Act is that it encourages the purchase or investment in US treasuries. So I think, in that regard, again, I think very strategically clever move from the US government to put in place, this framework. Yeah. So I think, sorry, just remind me, what was your question?
Well, just what do you think? Is it reinforcing US dollar dominance, or how do you think it will?
Yeah, exactly. So I've kind of touched on that, and I guess the other side of the equation is that there will, in light of all of that innovation that's coming out of the US, spurred by the regulatory framework there. I think we're probably going to see some counter movements at a local, regional level. So certainly, as quite a few of us have said, as Samson has explained, as Hassan has explained, we are seeing innovation within Southeast Asia and APAC. I think there is still a case for local stablecoins that are denominated in currencies other than USD, simply because that creates greater interoperability and compatibility, and reduces FX risk when integrating into local economies. I think it's just easier for local merchants to have say, in Singapore, SGD denominated stablecoin, or you could have a local stablecoin in places like Indonesia and elsewhere. Those jurisdictions are obviously a little bit slower when it comes to promoting that type of product and asset class. But I very much still see the use case. So, in parallel with the sort of emergence of USD denominated stablecoins, which probably for the foreseeable future will continue to dominate, we will still have, I think, at least a few sort of local players.
Yeah, I think this is a perfect question for Samson, since he is a Singapore local stablecoin issuer. Could you possibly talk about any consistencies across the different legal frameworks, Payment Services Act, Genius Act, MiCA, for example, and maybe what are the key differentiating factors that we should be aware of? I know there are some consistent requirements, one-to-one reserve cash and cash equivalents, but I'll leave that to you to explain maybe further. He might be having some technical difficulties, though. Samson?
Hello?
Yes, we can hear you.
Okay, can you hear me now?
Yeah.
Great.
Yes.
Yes. So I guess in terms of the different regulatory requirements, you're right in saying that the common theme that cuts across all of them is how do we ensure that one token is $1, right? And almost all of them universally converge to ensuring that there's a pool of assets that then back the value of the token. So we see that across Genius, we see that across Mika, we see that across the Hong Kong stablecoin ordinance, we see that across the Singapore framework, right? How do we ensure that the value of the token that you have is stable? And the primary mechanism is really having a pool of reserve assets that is there dollar for dollar. Now, the next question becomes, okay, if I know we have $1 there, how do I know that I have $1 there? Then that's where you would see that the different jurisdictions generally require some sort of attestation, some sort of audit requirements to have a third party coming in to look at your fiat reserve assets, whether they be in bank deposits or fixed deposits or treasury bills. To say what those value, what the value of those assets are, and to ensure that it is always more than or equal to the total coins you have in circulation. So I think that thought process is it's very easy for people to understand, right? That then therefore your stable coin is just a tokenized representation of $1 in that basket of assets. So that's one of the things that we see. Where the different frameworks and where the different regulations start diverging is in their recognition of foreign stablecoins. And I think this was one of the conversations I was having with David from Circle. I think, Alice, you were there too, right? In our previous, the SFA, the one where you hosted us.
Yes, correct.
Yeah, this same conversation was around the different regulatory approaches, because you see, for example, in Mika, you need to be licensed as an e-money institution. You need to incorporate a company. You need a company somewhere in the EU to be licensed in the EU, and you hold all your reserve assets in the EU. And that's one way. And then you see on the middle way, it's kind of like where US and Hong Kong has landed, where they say, okay, if you want to issue stable coins, sure, here's one way. Or if you're a foreign issuer, we would afford you the same form of recognition as long as there's a certain comparable regulatory standard in your home country. And then on the opposite end of the spectrum, you've got the Singapore the Singapore framework, which I understand might be, subject. They might be relooking at it and might have some changes in the upcoming months. But the framework in Singapore is that, yeah, you can have your stable coin or any coin that purports to be stable, but if you want regulatory recognition, then you can voluntarily apply and then get and ensure that you fulfill all these attestation requirements, safeguarding requirements, prudential requirements, and then your stablecoin will be regulated, MAS regulated stablecoin. Yeah. So you see these three different approaches, and the one that I'm most wary about are perhaps the fragmentation and the isolationism type, where you've got to basically divide up your pool of assets to have it in that one country, or you got to issue an alternative version of a token just for that jurisdiction. And I think that's bad for consumers generally, because it confuses them. If like what Hassan was saying, I want to pay my supplier, right? A very strong use case of stablecoins is being able to send and receive stablecoin payments. Now I've got to ask, oh wait, is my supplier based in country X? Okay, if my supplier is based in country X, I need to get country X version of that stable coin to be able to send it to my customer. Otherwise, he won't be able to off-ramp it in his local exchange. And then he's got to go to the shadow market and then try to do some try to do some swaps with possibly shady characters, right? And so that's kind of where we are seeing, right? This fragmentation is going to be very challenging. We hope that regulators around the world might converge somewhere between some sort of mutual recognition of their relevant regulations to ensure that we get a single stablecoin. Customers shouldn't need to know whether their XSGD is a Singapore version, a Malaysia version, a Thailand version, a Philippines version. It should just be XSGD or the XUSD, and when it gets sent and when it gets received, that's the very token that they're able to interact with. That's the very token that maybe one day can be on IXS to get some yield-bearing instruments. That's the very token they'll be able to trade at Coinbase. That's what we really hope.
But right now, so yeah, go ahead, Hassan.
Yeah, I just wanted to jump in on the back of that. So just going back to also what you were asking, I do think that USD stablecoin dominance when you look at on-chain versus traditional markets is lopsided. I think it's unclear whether this is going to harmonize back to just traditional FX markets, or this is going to be systemic and persistent, just because I think it also shows revealed preference of consumers around the world, especially where currencies are not as robust. And I think this is something that governments and regulators and central banks around the world are grappling with, especially ones where there are capital controls. That said, like you can't put this genie back in the bottle, right? This technology is sort of out there, and the way that we see it is that it really is about thinking about like governments as additional sort of nodes in these networks, and helping to bring these central banks and just kind of currencies come on chain as well. I think for us, like especially this part of the world, it was extremely important for us to work with StraitsX on supporting XSED, because we see that as sort of the premier kind of stablecoin out of Singapore, and we did the same with AUDD out of Australia as well. And we believe that this local stablecoin or non-USD stablecoin theme kind of deserves sort of treatment on its own, because as what Samson was saying, with new kind of regulations and frameworks sort of coming online, I do think that governments are sort of waking up to, look, we need to have some sort of a strategy or play that our currencies are also represented on chain. So
Exactly.
I think this is something that is extremely important, for sovereignty as well, and just also for being on an equal playing ground. So I think this on-chain FX is also a really essential ingredient on making sure that all of this commerce and transaction and payment flows cross-border can work better than the way that they do from correspondent banking. Because my kind of experience again from the Philippines was that when we had these kind of cross-border flows coming in, but most of the institutions and businesses that were trying to pay in size, just the liquidity just wasn't there, on the peso USDC kind of swap. And a lot of times, like, you just had to either kind of rebate the market makers, and somebody across the value chain would have to pay for it, or people sort of took the bid ask for what it was, because it was still like faster settlement at the end of the day. So you made up in other places. So I do think on-chain FX is an incredibly exciting area, and Cumberland and others are doing a lot of work in this space. But ultimately, it's an ecosystem effort that a lot of these kind of contributors have to come online. I think it'll start working. It's just a matter of time.
So then, just following on what you just mentioned there, from your vantage point, sitting at Coinbase, how are stablecoins being used? Is it primarily for settlement, payments, treasury management, or is it something more a bit more sophisticated, like RWA, tokenization, yield generation? What are you seeing?
Yeah, I mean, we do pay out rewards on USDC because of our relationship with Circle. So on the institutional side, we are seeing a lot of adoption, but I think it's a lot to do with just kind of having resting assets productive. especially asset managers and market makers that do want that kind of liquidity freed up as part of their trading stack. But they also don't want to forego sort of rewards on that. So I think that's one that we've seen for quite some time now. It's been around for a while. Same goes for consumers as well. The USDC sort of rewards program that we have continues to perform exceptionally well. And that can, now it sort of goes across with, constructs like, yield-bearing stable coins or, tokenized money markets and whatnot, which are just becoming more fungible. But for a long time, this was the only game in town. But one that I'm really excited about and that we announced in Singapore at Singapore FinTech Festival last week is this new offering that we have, which is Coinbase for Business. So what we saw was that consumers, have a lot of these kind of capabilities and institutions have been catered to for a long time, but businesses feel underserved because these corporates and SMEs and VC-backed startups have unique needs, and then if you try to kind of make them go through these heavy institutional onboarding processes, they just don't have the wherewithal, the documentation, or frankly, like as a small business owner, like even the time to go through something like that. But they do want access to stable coins, for the reasons that we discussed before. So what we've done is we've revamped and rebundled our product with streamlined onboarding so that at least for the US and now for Singapore, ACRA registered entities can actually onboard onto Coinbase for Business. And then just take advantage of these crypto rails like consumers and institutions have been doing for a while.
Yeah, maybe Samson, do you have anything to add to that? What are you seeing at the infrastructure payment layer?
Well, I was just thinking of what Hassan just said about the Coinbase business, and when I was looking at it, I remember seeing the press release. Hassan, when you were saying about new bank just now, and I'm looking at your website now, what if, right? Isn't that kind of we said, oh, there wasn't a bank that helped customers hold crypto, send crypto, receive crypto. Maybe Coinbase business. Yeah.
Some alpha there. Yeah.
Well, I'm glad that we are working together, and I would love to see how we can power the Singapore businesses through the continued receiving and sending of the XSGD. But then back to Alice's question, right? Alice, you asked, then what are we seeing at the infrastructure level? And this is one of the items which, I was having a chat with my CTO, and he was really excited. One of the parts we are working with Coinbase on was having our XSGD being integrated onto the base chain. And the base chain, and my CTO was really excited because he was sharing with me about the base chain having the X402 agentic payment protocol capability. So I was like, okay, thanks for giving me this whole spiel of words. Could you explain it to me in perhaps in English? I still couldn't understand, but what I took away from that was that basically the payments of the future today, if I had to perhaps book an air ticket or choose a hotel, I might go check. I type something in ChatGPT. My personal assistant in ChatGPT would narrow down a few hotels based on a certain criteria, and maybe even based on my previously programmed or my previously stated preferences. Now, what if I want to go one step further and say, okay, actually book it, right? And don't just not just book it, but book it in conjunction with my air tickets, so you know what time I land, and then therefore you book a hotel that fits that criteria that I'm setting out, and for the days that I'm going to be there, and then book my return flight at the same time, right? Today you get a personal assistant, like a actual human that goes and helps you with that. But the promise of the agentic AI powered with the payments capability is that they can then execute that purchase for you. They can book the flights for you, plus the hotel room for you, and then they can instrument your Web3 account to be able to deduct, to use the stablecoin that you have in your wallet to make payment for those ferry tickets and the hotel stay. So when I heard that, I was like, that makes sense. And that's the infrastructure that doesn't quite exist just yet. And that's that infrastructure that we are really excited to be working with Coinbase, Hassan and his team on.
Nice.
Yeah, this one, is really kind of at the frontier of the frontier.
Yeah.
A lot of, I think, folks in the audience, most likely if you're kind of in the trenches and stuff, like AI and this intersection of AI and crypto is something that people have been doing a lot of experimentation around, and I think there's many interesting things going on, like BitTensor or whatnot. But people always had this instinct that agentic payments was something that like made sense. And one of our kind of engineers, who actually used to be the head of engineering at Zora before, when he came back to Coinbase, he wrote this white paper, which is sort of Explorer 2. And Explorer 2 is basically like just a very simple spec, a standard that fits into the kind of HTTP sort of plumbing and fabric, and just allows for machine to machine kind of communication around sort of a payment request and then a payment fulfillment. So it's very simple on the in its design, and quite elegant, and sort of has this interoperability with Web 2. But then we've also added in some other things, like it's now part of a foundation with Cloudflare, so that it's credibly neutral. It doesn't have any alignment to any chain or any asset. So anyone can really basically just start building on Explorer 2, and it is kind of quite simple, with Cursor and Claude and whatnot. So we've just seen this explosion of interest come out of nowhere, and to be honest, like people start out like launching a lot of meme coins on Explorer 2 as well, which I think has kind of helped to break into the scene, at least on crypto Twitter. But there is a lot of serious kind of agentic payments work being done in the background. And then even at Singapore FinTech Festival, we had a demo for how you could use testnet XSGD via like a chat interface, which would then do an Explorer 2 request to the vendor, basically like for the swag, and then you would go pick it up. So that we had about 500 activations. So at least 500 attendees, like this was their first time, experiencing agentic payments. So I think it's very powerful. It's coming. And one other analog, going back to what you're saying about Amazon. So when you think about technology, like SSL, I think V2 or V3 was what finally allowed for card payments to be encrypted, and that's what allowed these giants like Amazon to emerge. I think with Explorer 2 and this kind of paper use and micropayments as this new kind of fabric that's been unleashed, I think we're going to see, another wave of, in my mind, like trillion-dollar companies that are going to come out of this breakthrough. So after Base, like this is the most exciting thing that's coming out of Coinbase, in my view, and I'm paying a lot of attention to it.
Nice.
Yeah, that sounds pretty exciting. And I know AI and I think tokenization took and payments took kind of center stage at SFF, Singapore FinTech Festival last week. And yeah, there's going to be definitely a convergence of all of these coming up. And I'm curious, I think maybe one last question for all of you. Do you think there can be, this is going to be the short version of it. I had this long prepared question, something about, all these participants coming in, piling in, banks, fintech, stablecoin issuers. Do you see this as healthy competition that will drive innovation, or is it going to create more fragmentation and complexity? So the short, question is, can there be too many stablecoins? Maybe we'll have Hagen and Julian take this first.
Yeah, sure. So, I mean, we're seeing a huge amount of interest in participation in this space on the part of players who've been, around for a while and who may not have traditionally been involved in payments, let alone Web3. But I think that's it's a good thing, right? The likes of Amazon or PayPal. PayPal is of course a payments player. The involvement of those guys means that you instantly have a very large network of potential users of the payment solutions that they are looking to roll out. And then you have, leaving aside those sort of incumbents or kind of legacy players, you have various new players that are sort of coming into the mix, whether they are sort of actual stablecoin issuers or sort of hybrid product issuers slash settlement network developers like Plasma or others. I would say that Fireblocks also has a role to play in enabling stablecoin payments across various sort of different types of use case. I think those players are sort of a little bit more Web3 native, and then across the spectrum you'll have sort of different iterations and sort of gradations of those types of operating model. I think that the challenge is really going to be interoperability. So there is a sense that everyone wants to pile into the space, but how is everyone going to be able to interoperate with each other? Because there is a sense of well, you need to scale, you need to be able to transact across different offerings, and that is a matter of, well, what is the sort of the settlement layer that's been developed, what is the chain that's available for the settlement of transactions, and which product is going to win the day. I think there will be competitive forces at work here, inevitably. I think it's in everyone's interest to try and find some uniform standards. But at the end of the day, you don't really know. I still think there are going to be probably one or two globally dominant players who have just been early to the party, who have been able to sort of see the writing on the wall and who have sort of read things correctly, maybe the likes of Circle and Tether, and that then sort of supplemented by a range of maybe sort of legacy, more traditional players who just can use the sheer scale of their networks, maybe the Amazons and the PayPals and others, probably also the Stripes, etc. And then you'll have sort of more sort of a few native players in the mix as well. That's how I see it play out.
Yeah, Julian, any thoughts to that? I mean, as a platform operator, how are you going about determining, what types of stablecoin issuers you're going to work with, regulated, unregulated, where they're issued out of, and where how do you see that playing out in the future? Because it sounds like everyone's issuing a stablecoin these days.
Yeah.
Whether they're a stablecoin or not.
Yeah. Well, everyone wants the 100% of the interest that you generate in investing into treasuries. So it's no surprises that it's a hotly contested asset, I guess. I think it's going to be hard to unseat Tether and Circle. Network effects are very strong. I think that anyone who has a considerable size of a platform can easily launch their own version, and it's just a pure economic or mathematical calculation on how much money can we make having our own stablecoin, and what's the headache and cost to actually set it all up and run it properly. So if you're Revolut or Visa or whoever, maybe more of a payment company versus a credit card, but if you're Revolut or some sort of fintech platform, and that you hold X amount of dollar transactions a day, and then you have X amount of people with wallets. I mean, Grab Finance is probably a good one. They've got the Grab wallet, so they know exactly how many people are holding dollars in their wallet at all times, and it's getting some traction, then that will see their own stablecoins. I think there'll be a great market for a white label product where just that, the interest that's accrued on those dollars in the bank get just split as a revenue share. So I think there'll be a lot of people who say they have a stable coin, but it's not real, it's just a branded stable coin of theirs, but it's just, you'll have to be big enough to convince Circle or Tether to do that for you. But I think ultimately, there's a lot of money made. Facebook tried to do this way back in the day. They had a plan. They had whatever billions of
The
users on
Libra.
these transactions, and there's advertising, and there's a real use case
Yeah.
for a digital dollar. So, yeah, I think the market leaders today will be hard to unseat. I think there'll be a lot more players, and then I think there'll be a lot more kind of white labeled versions. And again, if you've got millions and millions of users, then you could probably justify setting your own one up and taking 100% of that treasury return, even if it does go down to 2 or 3%.
Yeah, I think Samson, we were at the same talk with Ubix founder, and I think this is absolutely true. Ultimately, it comes down to acceptance. You can issue, but who's going to accept your stable? So that's the key. Anyway, I think we're down to 3 minutes, and I wanted to get back to Hassan, as I promised at the beginning, to talk about this token launch on Coinbase. I think Monad made its debut yesterday. I understand it's also available on Coinbase Singapore. Now, could you just explain a bit more on how that works? And both just from the thinking behind the new program, what's Coinbase trying to achieve? I've got a Singapore Coinbase account. Can I buy this, or is it only for accredited investors?
No, you can. So token sales are available in Singapore, and for as far as stablecoins go, that's sort of the original, I guess, use case of stablecoins, using USDC to buy crypto native assets. So you'll need some USDC in your account. There's a certain allocation cap that you have. It's 100K for regular users, and then if you have Coinbase One, you can get up to 500K of allocation. But stepping back, the idea here was that we do sort of a lot of secondary listings, but what asset issuers have told us for a long time is that they would like to work with us earlier in their life cycle. And so we also acquired like a company called Liquify, which does cap table management, and then recently acquired Echo as well, which is also sort of early stage access to kind of less liquid deals. So I think we're basically, if you fit all these puzzle pieces together, I think we're wanting to just allow users in kind of the right jurisdictions to be able to participate in these kinds of opportunities earlier on. And then I think the second thing is that we think we can do a pretty good job around transparency and just providing appropriate disclosures along the way as well, so that we can help clean the whole space up. So that's sort of the idea behind it.
Yeah, and there's some mechanisms built in, as in if you buy and dump early, you do not get further allocations or something, right? To prevent, I guess, massive drops in token price. Okay.
Yeah, I mean, I think we're just trying to incentivize the right kind of participation. So it's early days, but I think there'll be more to share as these sales go on.
Okay. All right, looking forward to that. And then I think for the rest of the speakers, we'll do a quick round of any big announcements that we can be the first to hear about, or what's in the pipeline, or if you want to tell us your prediction, have we hit the bottom yet? Or, give us your predictions, whatever you want to share with us. Samson?
Yeah, I'm just looking forward for the day where, my ChatGPT or Gemini helps me buy my air tickets using my XSGD, goes to Coinbase if I don't have enough, goes to Coinbase, tops up my account, get the XSGD, pays for the air tickets, then realizes that I've got a good refund, and then decides automatically to put some of that into IXS to get me my T-bill interest, yield-bearing stablecoin. And then when I need to pay it again, it sells it on IXS and goes through the whole cycle all by itself.
Oh, let's work that out. I'm sure it's possible.
I'm sure it
all
is.
Right. Hagen, any announcements from your end? Or your prediction? Any predictions?
Yeah. No announcements per se.
Okay.
If I made any announcements, I'd probably be breaching client confidentiality, but maybe a few sort of crystal ball gazing type predictions. So, I definitely think that over the next 5 years, there will be convergence between stablecoin rails and tokenized real world assets, even more so than we're seeing today. With stablecoins serving as the default settlement medium for on-chain capital markets and cross-border commerce. I think there'll be wider payment acceptance, across various sort of merchants. At the moment, merchants tend to like fiat. I think they will warm to stablecoins increasingly. I think we will see more institutional treasuries holding stable coins for liquidity management and instant settlement. We haven't really spoken about that very much, but the treasury use case is a big one as well. And so I think that there will just be sort of general convergence between what we currently know as TradFi and the sort of the on-chain space, and we will decreasingly make that distinction. I think that those two spaces are merging, and stablecoins is very much the catalyst.
Yeah, clearly we have a lot to talk about. Maybe we'll need to have a round two, but Julian, any big announcements or predictions? Have we hit the bottom yet?
I hope so. There's absolute mayhem on crypto Twitter this week. Everyone's a chartist and a technical analyst, and everyone's pointing to they told you it was going to go to this price. So I think I'm a believer in the global liquidity and crypto being more of a macro asset. So we'll have to see who wins the debate of the 4-year cycles are intact and we're going down, or we're actually just an elongated business cycle that is a year behind schedule. Hopefully, for everyone's sake, that the second one is true. No major announcements we make having our IXS community. We need to keep them. We'll keep them for when they're ready to come out. I think everyone knows that we've been working for a few months to get Bitcoin Real Yields live. So it's the first productization of loaning stable coins, which we've talked about today, to Bitcoin holders that are reinvested in tokenized fixed income. And we're doing that in partnership with a couple of custodians. So there'll be more of that coming out soon. That's what I'm most excited by. Thanks everyone for tuning in.
Yeah, thanks. And then just one announcement from the InvestaX side. We'll be launching the Franklin Templeton SG Benji on the platform next week. So stay tuned for that. Agree. Thank you everyone for tuning in. Really appreciate all the speakers' time and everyone else tuning in. Thanks again.
Thanks, Alice. Thanks,
Thank
Jules.
you so much.
Thanks,
Hagen. Thanks,
Cheers.
Hassan. Thanks, everyone.
Thank you.
Cheers, guys.
Bye.